Analysts predicted that Bitcoin could hit $300,000 to $500,000 by 2029, but the math says no. Good day, everyone. Welcome to the video of the day. Bitcoin hit $500,000. That's a prediction multiple well-known analysts are making of 2029. Sounds exciting, right? But when you actually run the math on what that could require, the numbers get a lot harder to believe. Let's check the math. Let's start with the prediction. Veteran trade Peter Brand, who correctly called the 2008 bear market bottom and 2025 bull market top, is projecting Bitcoin could trade between $300,000 and $500,000 by September or October of 2029. That's roughly 3 years from now. If the historical 4 year having cycle continues, he is not alone who predicted. Bernstein analyst Gautam Chugani and Mahika Sapra have made a similar call, pointing to booming the demand of spot Bitcoin ETF as they are reasoning to everyone. Important detail is that Brand's own words are should patterns continue, this is a conditional forecast, not a guarantee. He's also said that the traders fool themselves with price predictions, describing his own work as probability, not prophecy. Now the discussion was that the math that challenges it. Years where an outlet like CoinDesk ran the actual numbers and where the prediction runs into trouble. So if Bitcoin hits $100,000 per coin, its fully diluted market cap could approach $10 trillion. Even at the lower end, $300,000, Bitcoin's market cap would exceed $6 trillion, larger than Nvidia, currently the world's most valuable public company at roughly $5.2 trillion. Now look at the pattern of previous cycle. To 2018, peak was about 20x more, 13 peak was roughly 100x more, and 21 peak was roughly 3.5x more from the prior bottom. Each cycle has delivered a smaller percentage gain than the one before it, a shrinking returns pattern that has been remarkably consistent. And a move to $500,000 by 2029 would require a compound growth rate that rivals Bitcoin earliest most explosive years, except now starting from a market cap that already enormous. Now the discussion going on is that the case for it anyway. To be fair to the bulls, there's a genuine structural difference, the cycle that didn't exist before. That's institutional bias. So spot Bitcoin's ETF already hold over 1.3 million Bitcoin, more than 8 years of current mining output in one product category. One company strategy holds over 8 lakh 18,000 Bitcoin in its corporate treasury alone, nearly 4% of Bitcoin's entire supply. So when the 2028 halving cuts new Bitcoin supply in half again, down to 225 coins mined per day, and that same wall of ETF and corporate demand is still buying. Its tighter supply plus steady demand is the core argument for higher price. Now, this is very discussion part for every investors who are looking to the Bitcoin, that the price target 3 to 4 years out, built on a cycle pattern, is a scenario, not a forecast. You should plan your finance around. The math shows that genuinely why $500,000 is a much heavier lift than the percentage gains of previous cycle. If you're holding Bitcoin or considering it, the more useful habit is watching the actual data points analysts fetch. That's ETF inflow trends, corporate treasury growth, and the Fed rate policy, rather than anchoring to a single number 4 years away. To conclude, $500,000 Bitcoin makes a great headline. The market cap makes math is a much harder case. Both things can be true at once. It's possible, it's a longer shot than the headline suggests. So subscribe the channel to know more about this in the future. Share with your friends, family, colleagues too. Make sure to like the video. Welcome to Money Brief. Let's grow together.